Hey guys, it is Julie here with TipRanks, and today we're taking a look at the best rated stocks from the past week. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that have been trending with Wall Street analysts this past week. We're talking about more than 20 analyst ratings in the last 7 days. We're going to take a look at these companies, what it is that they do, what has them trending on Wall Street lately, and what those analysts are predicting for the stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our 3 trending stocks. First up, we're taking a look at Block. They trade under the ticker SQ, currently priced at $71 per share. Their stock has climbed over 24% in the last year and is up 3.3% in the last 3 months. Block is a leader in the fintech world with their 2 popular apps, Square and Cash App. Their Square app is focused on merchants, allowing them to automate business actions for greater efficiency and to organize their diversified revenue streams. They have both software and hardware, as their hardware devices can turn any smartphone into a credit card reader. Their Cash App approaches fintech from the customer side of the transaction, allowing their users to streamline access to and use of money, making quick, easy, and universally acceptable online payments. Block has been trending this past week following their Q1 earnings report, which they shared on May 2nd. Not only did they have both an earnings and revenue beat, but they also increased their future guidance. For their first quarter, they reported earnings per share of 85 cents, coming in 13 cents ahead of analyst expectations. They also saw gross profit of $2.09 billion, which increased 22% year over year. Looking forward, they're now anticipating gross profit for the year to be $8.78 billion, which is ahead of their $8.65 previous target. One analyst from Barclays recently noted that the company is becoming increasingly likely to be a candidate for the S&P 500. They said while it is certainly not guaranteed, Block is a likely candidate to be added at the index's next quarterly rebalancing, and this inclusion could be a potential catalyst for the shares. In the past week, the Block stock has had ratings from 20 different analysts. One of those is a 5-star analyst from Canaccord Genuity. They said that the company's ambition to become a Rule of 40 company by 2026 reflects a solid growth trajectory, with the near-term goal to reach the Rule of 32 status by the end of 2024. This target is based on a balance between revenue growth and profitability, signaling a healthy financial outlook. While the stock has picked up 20 ratings in the past week, overall it stands at 30 current analyst ratings, coming in as a strong buy. The average price target comes in at $90.42 for an upside of over 27%. Looking at our most recent ratings down below, on the low end we do have one sell rating with a downside of 15%, many of the rest in the high 20s to north of 40% upsides, with our high-end price target coming in at 42% upside. Our second best rated stock of the week is Datadog. They trade under the ticker DDOG, currently priced just shy of $120 per share. In the past year, their stock has climbed over 37%, but is down 11.5% in the last 3 months and took a drop off here earlier this week. Datadog is a company in the cloud software world. They offer a range of observability tools designed to provide real-time data analysis gleaned from monitoring, tracking, and securing cloud-based websites. They make cloud monitoring systems available to customers through the popular as-a-service subscription model. The company has existing strategic partnerships with Google Cloud and has integrations with Vertex AI. The Datadog stock did fall earlier this week after their Q1 earnings report, but the company did have an earnings and revenue beat. The other piece of news that came out was that their president would be stepping down by year end. Now, following his resignation on December 31st, they do intend to increase the size of their board from 8 to 9 members, and he will take a position there. Looking at their Q1 earnings report, the company did have earnings per share of 44 cents, beating the expectations by 9 cents per share, and they had a first quarter revenue of $611 million, which grew 27% year over year. They also saw a strong growth of larger customers. Datadog has had 22 analysts weigh in on the stock in the past week, including one from Canaccord Genuity. They acknowledged the strength of Datadog's core products in infrastructure monitoring, APM, and log management, which have collectively surpassed the $2 billion revenue mark, and pointed out that a large portion of their customer base has yet to fully adopt all 3 core services, indicating significant potential for increased customer spend. Datadog has 33 current analyst ratings. And their average price target comes in at $147 for an upside of about 24%. Looking down below at our most recent ratings, a lot around the 20% upside, give or take a few percent. Our high-end price target comes in at $160 for an upside of 34%, and a low-end price target is our hold rating here with an upside of nearly 9%. And our third trending stock is DraftKings. They trade under the ticker DKNG, currently priced just above $43 per share. The stock has climbed over 80% in the past year, cooling off ever so slightly in the last few months. DraftKings is a leading digital sports and gaming company and has become one of the U.S. betting market's fastest-growing sportsbook and fantasy league platforms, providing full packages of betting options and fantasy plays to sports fans of all stripes. They offer fans coverage of a wide range of domestic and international professional sports leagues, including American football, MLB, NBA, and the NHL. DraftKings is trending with analysts this past week after they released their Q1 on May 2nd. They've recorded a surprise profit of 3 cents per share, which beat expectations by 14 cents. The company also had a revenue beat, seeing revenue growth of 53%, coming in at $1.175 billion, and they raised their 2024 revenue guidance midpoint. Following that earnings report, we've had plenty of analysts weighing in, including one from DDOG, who increased their price target. They cited very bullish qualitative takeaways from the company's conference call, as their CEO noted that marketing efficiency is on par with the early stages of the sportsbook launch. Scale is driving natural promo leverage, engagement is improving, per cap spending is rising, and the industry still has substantial room for unit economic upside as it expands. Their strong buy rating is based on 28 current analysts. And the average price target comes in at $53 per share for an upside of over 22%. Looking at our recent ratings down below, we do have a high-end price target here with an upside of 38%, and low-end price target is a hold with a downside of over 19%. So that is a quick look at 3 of the best rated stocks trending with analysts in this past week. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are up to. So please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a great weekend, and I'll see you back here next time.